Hello everyone and welcome back into the channel. My name is Brent and today we're going to be doing our weekly recap for the 5th to the 9th of September 2022. We're going to go ahead and hit 4 different areas today. We're going to go ahead and do number 1, the overall performance of the M1 Finance portfolio since inception. Number 2, we're going to be taking a look at the weekly performance of our portfolio, what 3 companies were our best performers, what 3 companies were our worst performers. And then we're going to jump into number 3, the activity. What did we buy? We did buy 2 companies last week. I think we put about $250 into each. And we're going to go ahead and take a look at those companies and also any dividends that may have came in within the last week. And then also number 4, we're going to go ahead and update our dividend tracker to kind of showcase where our current portfolio dividend income is at. Update it with the last week's purchases and see how much our dividend income increased by those 2 purchases. And then I do have a couple companies that I am looking at to add a bit more of in my portfolio. So they're not new positions, but they are existing positions that I'm looking to average into. They're already in the green already, so they're not really getting like a deep discount, but I'll go ahead and showcase why I'm taking a look at them, and potentially we'll see if I buy them at the very end of the video. I'm not sure, right? I think this week will be pretty positive. Last week was pretty positive. I think we're bouncing off the I think it's the 50-day moving average. We fell below it, but we kind of used it as support, and we used the past day as a support, and we kind of broke right through the resistance there. So I think it may act as more support going forward versus any sort of resistance in the market. I think a lot of the market is kind of stabilizing a bit more, where we may see more green days or maybe more trending sideways towards the end of the year. So, 50-50 trend sideways or move up slightly. But we're not looking to go into new all-time highs anytime soon. And I don't know if we'll re-fall back into the bottoms, right? So that is what we're going to be doing today. A little bit of a long intro, but welcome in everyone. So let's go ahead and start off with number 1. We'll go ahead and take a look at the overall performance of the portfolio. So currently the portfolio has sprung up a bit as of last week. We're now hitting nearly $6,000 in market gains. We're getting very close to hitting earned dividends of nearly $4,000. I do believe by the very end of 2022, our earned dividends in this account will be reaching over $4,000. So I'm pretty pumped to see that hit. Our overall return isn't near all-time highs. I think we're still off about 10 or probably less percent. This is money weighted, so it's a lot different than the normal total return versus money weighted return. So this fluctuates a lot heavier versus a total return because of how it's weighted. In total return, I'm only down a couple thousand off all-time highs, but just the way that it's kind of measured, it's kind of weird. So scrolling through here, our top performers are Apple. That's going to be a really tough one to ever, beat. There would need to be something out there that really, really outperforms Apple to get up in that first slot. Avi is in second, and ABM is in third place, followed right behind by a couple REITs, BDCs, and a couple other companies here. Now, our worst performers overall are IIPR. This is a REIT within the MJ industry. Has been having a lot of issues. Its earnings, its net income, its funds from operation has all been on the decline. So this one doesn't have much of an end in sight. I'm hoping for some sort of a bottom recovery, not like a recovery, but some sort of bottoming in this position. Stanley Black & Decker, same thing with this. This has been on a downtrend. There's really no end in sight. I don't see any sort of support kind of happening. I was taking a look at these positions as well as Clorox and Digital Realty Trust is okay. But as far as IIPR, Stanley Black & Decker, and Clorox, these 3 positions right here are very just kind of continuing to trend lower. There's really no end in sight. When I looked at their company, I looked at where they're heading, their earnings per share, their net income, a lot of it's facing to the negative. So there still may be more red, but these are our 3 worst positions in this portfolio. And that is the overall performance of our portfolio overall. Now jumping into number 2, the weekly performance. Now we had a pretty positive week this week, up 2.92%. We sat through some X dividends. We can see that we earned upcoming by sitting through a couple X dividends will be paid in the future $15.49. We also had a market gain there of 1,223. So overall, our weekly return there is 2.92%. So really quickly, let's see what companies helped us this week get up there. Now, Starbucks here. Starbucks, huge recovery here. It has been on its way up. It did bottom out and it's been trending up slowly. So this is really big to see a 7% gain on the week within Starbucks. Lowe's is one that we purchased last week. I saw I'll show you guys again why I'm kind of looking at Lowe's again to potentially kind of add more capital into, but it is up 5.36 again this week. Digital Realty Trust, this is one of our third positions in the portfolio, down overall, and IIPR is our worst position in the portfolio. You can see that this is up 5%, DLR up 5.22. So I'm hoping to see some sort of bottoming out process within these companies, that they stop bleeding. But then I'd have to hopefully see their funds from operation, because this is a REIT and this is a REIT. They're both REIT, so their funds from operation is very important to make sure that they're operating, not going to be cutting any sort of dividend, and their share price begins to kind of climb as investors are actually looking to buy more of it at a discount right now, right? But right now, if there's some sort of bottoming out process, these may be looked at more. And then our worst performers this week, Realty Income. A couple investors in the chat this week I did see were asking what the heck happened with Realty Income. They're down 1.33% on the week, but I think during the week they had a bit of a hard hit of like 3 or 4%. I didn't see any news, but there may be something out there. I didn't really check into it. It's already positive overall pretty nicely in the portfolio. Really hasn't had a lot of rockiness in it where it's tanked to the downside. So that's just normal trends of the market. Colgate, second position in the negative, down 0.18%, and then we didn't have any other red this week. So overall, pretty positive. You can see last week we were completely red in the market, whereas this week we have only 2 positions that are red, and they're not red by too much. And we do see some of our negative positions overall in our portfolio are beginning to kind of show signs of some bounce back. So that's kind of nice to see in the overall performance. Now, taking a look at how we did in comparison to, say, the S&P 500. Now, the S&P 500, even though it was down, it ended Friday down 1%. It opened Tuesday down 0.5%. It still made a very, very nice recovery throughout Wednesday, Thursday, and Friday. So here, 1.86% gain on Wednesday, another 0.75% gain on Thursday, and then finished very strong on Friday at, had a huge peak boost right off the beginning of the day, and then just continue to kind of trend upwards throughout the rest of the day. So overall, for the 5-day here, as of Friday through Friday, the portfolio or the market here is up 3.65%. The Dow Jones right here, Dow Jones 2.66. So I think we sat somewhere between, right? Our portfolio is up 2.92. So we kind of came splat right in the middle. That's generally where we sit. And Nasdaq here had a big boost of 4.14% on the week, and the Russell up 4.04. So overall, the worst performing index here to date is Nasdaq, down 22.58%. Still year to date, followed right behind by the Russell 2000, down 16.14. Then we have the S&P 500 down 14.66, and our number one as far as performance this year is the Dow Jones, only down 11.52. So it's been a bit of a rough year. Here we are 9 months into the year, and we're only down 10%. We're in a correction territory, right? We're down 10%, 10 to 20%. And we're kind of trending there. There's no reason to pop back up. There's no reason to fall back down. They're trying to work out inflation right now. Are we on track to lower our inflation number? And, I've seen a couple videos out there talking about Bill Ackman kind of coming out saying that inflation within the next year, looking at potentially 4%, somewhere within that range. He's easing up on his negativity in the market. So I think that'll be kind of good overall, right? It's hard to predict what things will do in the short term. All you can do is look for short-term opportunities for long-term gain, and just invest your money into companies that look sound overall, right? 1 week performance here. This is the S&P 500 snapshot. Last week, every sector was red. If you look at the market this week, every sector is green. We had a lot of recovery in the NASDAQ. A lot of that comes from Tesla, up 8.13, Amazon, 4.26, Google, and Microsoft only up 1% there. Meta beginning to kind of bounce back. Meta has been looking like some bouncing back potential. It's kind of hitting 170. I think that's one of its rough spots. So if it can break and keep and maintain that momentum to the upside, we may see Meta beginning to track back. I bought Meta at about $300. I am down roughly 40% in Meta, and it hurts looking at that, that loss. But because it is a pretty big loss, I think I put $12,000 into Meta. It's down, $5,000 or $6,000. So in a single position like this, when I went into growth, that was one that I believe would do really well. Well, guess what? Slapped in the face and knocked down hard. But overall, gonna continue to hold it. Doesn't pay out any sort of dividend. It's just one that long term, I don't think they're gonna have too many issues if they can kind of get their stuff on track. I know there's so many memes out there with the CEO here, but who knows? Who knows? Company overall, that's what you kind of focus on, right? Now jumping back over into M1 Finance, taking a look at number 3, the activity of the week. Now this past week we had the 5th to the 9th. So between the 5th and the 9th, we did have a couple dividends. We had Johnson & Johnson, J&J. Go ahead and bring out my handy dandy calculator. Let me go ahead and bring it right here. So Johnson & Johnson paid out $11.46. And then we had Pfizer paying out $12.73. So grand total there for the week of $24.19 in dividends. And then we made our deposit on Friday. So we did deposit $127.66. So we have roughly $151.85 of buying power, which does look correct. That's on track. And also we had 2 buys last week, so Lowe's and Merck. And those are on my buy list right here. I have Lockheed Martin, Hormel Foods, Lowe's, Pfizer, Starbucks, and Merck. These are all positions within my portfolio that I am looking at adding into. I think all of them are positive. So there's I'm not buying anything into the negative to kind of average down. These will all be positions that I'm kind of buying into because I do see some sort of potential, not like a discount, but just an opportunity to just buy more shares for the future. So Lowe's and Merck were positions that I added into. And our portfolio here, as of last week prior to buys, had a annual income of 1,000. Let me go ahead and bring out my notepad here. I'm going to go ahead and write this stuff down. So our current yield is 2.89. Our yield on cost is 3.21. Our annual income is $1,251 as of last week prior to our buys. Now, we purchased Lowe's and Merck. So in order to update our tracker here, I use trackyourdividends.com. You head in here and you create your very own free account, and then you put in your holdings here. And all I need to do here, because I already have these holdings in here, is just kind of update them. So I just have to look up Lowe's. Lowe's is right here. And I go back over here and kind of look it up once again, Lowe's. So I now own let me go ahead and write this down, 9.95738 shares, and my cost basis, average price there is $177.94. So then I come back over here to my tracker, I click on the little edit button, and I update my shares, and I update my cost basis. See, my cost per share went from 174 to 177.94. So I did increase my cost basis there by quite a bit. You can see our income right there went from 35.38 to now 41.82. So it went up roughly $6 there just from the purchase within Lowe's. So the other company that we purchased was, what was it? Pfizer? No, it was Merck, right? Merck? Yeah, Merck. Back to our holdings. So Merck was the other one that we had purchased, MRK. And of Merck, we now have 22.99834 shares at an average price of $77.58. So same thing with this one. We're not getting any sort of discount here. If we click on edit, our shares now are 22, right? So we purchased, 3 additional shares there. Well, almost 3. Fractionally, we purchased 3 shares. 8.34, and our cost basis here went from $75.97 to $77.58. Now, Merck here, it paid us roughly $53.97 every year. Let's go ahead and update this, and we're going to see 53 to now $93. So we just increased our income in this company by $10, right? So $10 from here, $6 from there. If you go back up to the top and do a comparison of our value here, so 43,825 to 43,825 rounded up to 826. So this and this are now synced up as far as positions and shares and cost basis. So our annual income at the beginning was 1251. It is now 1267. So that is a difference there of $16 that we just increased our annual income by, just by adding a little bit of money into the market last week. So yeah, we just gave ourselves a $16 raise. I don't know what the equivalent of that is on a weekly, there was one year when I was working one year, they gave me a 25-cent raise. 25 cents. That's like an extra, I don't know how much that is per year, but man, that was a slap in the face. I was like, what? 50-cent raise? I don't know how much I was making at the time, but just 15 cents. It was horrible. But yeah, we just gave ourselves a $16 boost. Actually, I can find that out right now. I could just use my calculator. We could just use our calculator, take 16, divide that by, what's 52 divided by 2? 52, oh wait, would it be 52? Yeah, it'd be 26. There's 26 work weeks in a year. And how would I do the math on that? So if we just do 16 divided by 52. So we just gave ourselves a 30-cent raise per week, I guess. That's not really hourly increased. Hourly would be a lot less. I don't know how many hours are in a work year. 40 times 52. I think we could do that. There's 40 hours in a week times 52. 2080. So 16 divided by 2080. We gave ourselves a 0.007 cent raise. So almost a penny there. But hey, it all adds up, right? It all adds up. It all adds up. That's the fun basis there. Okay, so we covered number 1, 2, 3, 4. Now jumping over into the last portion of the video. As far as the companies that I'm looking to add into, I'm looking at Lockheed Martin. This is one. Oh, no. I was going to take profits on Lockheed Martin. That one's here. So Lockheed Martin, I was looking at its earnings per share. It's been on the decline here. Last time this has been happening. Hasn't happened in quite a while, but overall, I don't think it's really been affecting much within the portfolio. You can see here that the share price was kind of climbing very high, and then earnings per share, net income dropped like a bucket going into 2018. It didn't affect the company right away, but you can see afterwards it did have a bit of an effect, but then it quickly recovered. Here we see earnings per share is on the decline here, several quarters in a row now. Last quarter of 2021 looks like it was a big decline as of the prior quarter, and then quarter 1 of 2022 or quarter 2 of 2022, they've all been on the decline as well. If we take a look at the 1 year here, we can see that there was a decline from entering 2022 into 2022, and then recent earnings per share came out where they're still on a decline. So this is earnings per share over the trailing 12 months is on the decline here. Net income kind of follows along with the earnings. So, I mean, if I wanted to, I could take a little bit of profits on Lockheed Martin because it is on a trending. I think a lot of investors are kind of looking at this one and saying, hey, I could potentially lock in some profits now before it does correct a bit. I think it will correct a bit, 50-50. If you're looking at it, 51% chance to come back up the highs or 51% chance to come and go a little bit lower because it is slightly high, right? We can see highs of back of 2020. It's essentially where it's at. Its earnings per share is kind of coming out. I have to look at this its earnings whisper and kind of take a look at where it's hit. But just to kind of be on the safe side, just to take some profits, I kind of looked at taking profits on Lockheed. Hormel Foods is one that I potentially am going to be adding into a little bit, but I think I already have quite a bit of Lockheed Martin. Not Lockheed, Hormel Foods. I have $2,100 of Lockheed Hormel Food, and Lockheed Martin's on my mind now. I have $2,100 $100 of Lockheed Martin that I could scrape a couple $100 off of, just kind of put like $300 into my buying power and just kind of average or add into another position that I feel is a little bit better. But Hormel Foods offers 2.19% starting yield. It has been beat down a bit. It has been beat down a little bit, not too bad. Let's go look at the 6 month here. So you can see our share price is trading down below 46.86, not quite below those, yeah, what is that, June lows where I had at that bottom. But it has kind of dropped, whereas its earnings per share is on the incline. It's offering a nice 2.19% yield. So anytime it has that nice little 2% plus yield starting point, it's kind of nice to average into, and its earnings per share has been on the incline. So that's kind of nice for Hormel Foods. Lowe's, same thing with Lowe's here. If we look at Lowe's, earnings per share here, quarter after quarter, has been on the incline. That's that red. Yield is offering a 1.68, so not high, not like crazy high. But if you look at the trend as of January 2022, and where the yield is at now versus where it was at the beginning at 1.08 versus 1.68, that's a pretty good percent yield increase there. And then their share price did bounce off the 50-day moving average. It bounced off that 195. So Lowe's could potentially be kind of trend between 195 and 213. If it can break above 213 and then stay above it, it may use it as support versus resistance and then kind of trend a little bit higher. So this is just kind of be one to, again, these are all long-term, looking at Pfizer here. Pfizer offering a 3.32, so kind of near the highs where it kind of has like a little rotation where it goes up, it goes down, it goes up, it goes down. Pink line is earnings per share. It's been on the incline, so that's positive over the last multiple quarters on the trailing 12 months. So its share price is down below 50-day, 200-day. It is making some sort of a little recovery here. If you look at the 3 month here, it did have a little bit of a double bottom where it had this a second higher double bottom. So this is generally positive. So this would be a good time to kind of add into Pfizer. Pfizer is one of those positions in my portfolio that doesn't have $2,000 in it. So this could be one where, hey, I shave off a little bit off Lockheed, add my current equity, and put it into Pfizer. So those are just some thoughts there. Starbucks, we already have quite a bit in Starbucks. I got that to a good position. You can see here recently it did break above and then close below. So for a nick there, it kind of pushed right above that 200-day moving average and then fell below it. So it's kind of acting as resistance right now. So you can see here it bounced off that 50-day very strongly, hit it, it was kind of trending low, kind of positive, and hit that 50-day, used it as support now versus resistance, and pushed itself very nicely. So now it's kind of bouncing in this trend. We may see Starbucks kind of bounce back. You can see it is down by quite a bit. If you look at the 3 year here, we had highs of about 120, so it's off $40 or so off those highs. Its earnings per share right here has been on the incline, and it's kind of trending here. So it's not anything negative. It's just kind of to watch for, but they could definitely use some sort of recovery, especially with how their earnings per share has been. They haven't really lost a whole lot recently versus what their share price has done, right? Their share price has gone into the dumps mostly off of fear versus off of fundamentals of the company. And then Mark here is the other one here. I purchased this one last week. Earnings per share has been on the incline. So if you look over the 1 year, quarter after quarter, earnings per share has been rising on the quarterly report. It did trend a little bit lower. Didn't even come down to its 200-day moving average before, having a little bit of a double bottom right here. Double bottom with a higher double, and then kind of trending potentially higher. So I did buy a little bit more of this one last week, and it's all looking kind of nice. It doesn't have like a higher than average yield for the year at 3.11, but if I look at Starbucks, they're offering a nice 2.21. They're not offering the 2.6 that they were prior. Pfizer is offering a 3.32, which is a little bit on the high side on average for the year. And Lowe's, let's take a look, 1.68. Yeah, so I had bought Lowe's last week. This one doesn't look too bad long term. And then Hormel Foods was on average, right? It's nothing special. Price wise, you're buying it just kind of average. So what I can do here is take a little bit of profits on Lockheed, say a couple hundred, like 200 bucks, and then add it with my investment into Pfizer. A little bit there. I think Pfizer. Where is this one? So we have Merck coming up on X Dividend on the 14th. I think that's this Wednesday. Yep, this Wednesday. And I think that's all that's coming up on X Dividend. Yeah, no lows or any of that. So, okay, let's do that. So over here, we're gonna go ahead and take a little bit of Lockheed and sell by clicking sell. This is all within a Roth IRA, so there's no tax implications. I don't have to worry about claiming capital gains on my taxes for selling $300 of Lockheed Martin. I can just do it easy peasy. And then I can go ahead and take my 451.85, divide that by 2, and get 225.92, and put that between Pfizer. Go down to Pfizer, I can go ahead and click buy and punch in 225.92 there into Pfizer. And then I don't mind having more Lowe's. I think Lowe's is a great company. Between Lowe's and Home Depot, I generally go to Lowe's more often than Home Depot, and those are the only two places you're really going to go to when you're looking to buy like outdoor home goods. So 225.93, and confirm the buy, and done. So what do you guys think? What are you guys buying out there right now? Are you guys buying anything? Not buying anything? What do you guys think between these two picks? I'm taking profits on Lockheed. I had considered Hormel, Merck, Starbucks, Pfizer, and Lowe's. So those are my considerations to buy in September-ish within the portfolio. Not for you guys. These are just for me. Don't buy these companies unless you do your own research, right? But those are companies that I'm looking at within my portfolio that I believe are offering opportunity versus, for the long term. So I think that's great. I think that's good where we're at now. So let me know down in the comment section below. What are you guys buying? Are you guys into anything specific? Are you guys buying into the S&P 500? I also looked into the S&P 500, and I had posted over in my discussion tab, I believe, on YouTube. So over the 1 year, if we're looking at S&P 500 and we're just looking at the 50-day, 200-day moving average, it did jump below recently, the 50-day, but instead of acting as resistance, it did pop right back through it really quickly, easy peasy, and then it is making its uptrend here. So if it can break 426, last time it had right here at 429, it was at the 200-day was 430, I believe. It hit 421, 429 and closed, didn't pass it, and then trended very sharply down. I have call options for, let me see here, I think the 16th or the 23rd. I have call options for the S&P 500 at 420. So if it doesn't close at 420, I keep my premium and I don't have to sell my shares. But I don't think we're going to be passing 426. So I felt 420 was a good option. If it sells, it sells. If it doesn't, I keep my premium. And then I could resell those calls. But I think we're in that trend where we're just either going to be trending within a range for the rest of 2022, kind of like, we're going to stay within 400 to 430. I don't think we're going to be bouncing around too much outside of that unless some earnings come in, which really move the market. So that is going to be, again, if you guys are not subscribed, I would highly appreciate if you go down below, hit the subscribe button to subscribe to me, and then hit the bell and hit all notifications. That way you guys get notified every time we make a brand new video and upload it here on the channel. And then of course, check out my other past videos. There's a range of them as far as, our portfolio performance over the last 4.5 years. If you guys have specific comments, questions on topics or ideas, definitely let me know as well. I do have another channel that I stream on, right? I stream every Monday, Wednesday, Friday on my gaming channel. Right now, I'm streaming Minecraft and World of Warcraft. So if you guys do want to hang out, chat, doesn't have to be stocks, but if you'd like to talk stocks, you guys can always check it out over there, Monday, Wednesday, Friday. And that is essentially it. So thank you all for tuning in. I will see you guys in the next video. Have a great week.